This is our Forex blog for August 20, 2012. And like we do most days, the first step of our three-step easy Forex system. And we have many different ways of trading. You can watch all of our videos to learn all of them. This is the easiest way for new traders to learn how to trade. And then you can pick up our more sophisticated methods in the future. This is our currency meter that shows you each currency and its real-time strength or weakness. The histogram on the top is made up of 5 different tools. 3 of them measure the intensity or direction, and 2 of them measure the intensity of the direction. And anytime it's at or above the 80 level, it's extremely strong. Underneath that, we have the 15-minute trend, hourly, daily, weekly, monthly. Obviously, the more time frame trends that line up, the better. But sometimes you'll have real-time strength, like you can see here in the yen, where the weekly and monthly trends against that. Most of the time, you're going to find some strength, and typically it only continues for maybe a half an hour to hour and a half, 3 hours max. Today's kind of a rarer example where it just continued. Anytime you see a lot of strength followed by the pullback moves having very little weakness, lots of strength, very little weakness, that's a momentum that's likely to continue until maybe right now where you started to see a little bit of weakness and now it's showing less strength than before. Maybe that's the end of the uptrend. But the point of using the currency meter is just simply identify the best ones to be in. The yen, very strong today. The euro was extremely weak from 5:30 to about 7:30. So that's a good one to be looking to sell. Weak euro, strong yen, and you want to sell this. Now, first of all, looking at the 5 pips per bar euro-yen chart, when it's above the balance point, or I'm sorry, the point of control, this is our value areas. This is Friday's average price. When it's above there, it tends to go up. This is the value area high. Above that, it's very bullish. You can see it tried to go higher. The momentum, when it was going up earlier in the day, got less and less. So there's a lot of reasons to be expecting a possible pullback. This is Sunday night's low right here and the point of control on Friday. Underneath that area, it's likely to go down. Now, a lot of traders, want to have something even simpler than that, and that's why I'm creating colored candle bars to kind of just show you the intensity. And there's another tool I'm working on that will show you what the 4-hour value area is. And so, when you're above the 4-hour value area, you definitely want to be looking for buys, and underneath the 4-hour value area, the previous 4-hour, you want to be looking for sells. So you can see starting the day off when it was above this value area here, it went up, went up. Sometimes it kind of starts right where the previous 4-hour value area is. When it goes above here, you went long. When it breaks down underneath you, went short. It only fell 10 pips. Came back above here. If you went long, obviously it hit the upper value area high. And when it fell back down there, you went short. And you can see it fell 30 pips. Pullback, you made money, you made money. In a nutshell, that's really how you use this. And it has you focusing on, the highest probability. It gapped up on Sunday, came down to the value area of Friday, found support and went up. And again, sometimes it opens the next period underneath the value area. And so if that's the case, it's kind of going sideways and it breaks down, you go short. But if it goes above the value area, look for buys. You have a nice little 15 pip drop here. You're looking for this to be a support area that goes through it. And a lot of times when it goes through it, it pulls back a little bit. You want to buy the pullback. The bars are green. The trend is up. And you can also use this on hourly or any other time frame you want. Now, you can also see the dollar had strength today too, and it had a little bit less weakness on the weekly and monthly than the yen. So you could also, when the euro got weak, look to sell the euro dollar. Let's put first the yesterday's value area on here. And you can see this is Friday's average price, and this is last week's average price, which happened to be, at the same level. This is the value area high of Friday, which means basically 68% of the trading activity happened between about 69 and 22. And you can see it wasn't, it was moderately strong, dark green bars. When it breaks out right here, you go long. It's a resistance area. It pulls back here, finds support. You might have went long, and it failed to go over the high. So once it breaks down right here, you go short, 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 and you can see it fell about 65 pips. One easy way of trading is to use our digital signal processing based moving average. I like to put a 5-period moving average on here, shifted 2 bars to the right, and we click the DSP. This is very advanced digital signal processing based math, and it's very fast, and it's nice to let you get into a pullback. Here it was coming down, you wait for a pullback, you go short right here, and it's also a pretty decent place to get out of a trade too. You're short around 45, you're out of this trade maybe at 22, you made 20 something pips, and a lot of times these value areas act as support, and I like to wait for a 15 to 25 pip pullback. In this case there wasn't one, so I don't like to sell the first little mini pullback like this, because most of the time, or a lot of the time, very high percentage of the time, you get a little double bottom here and it shoots up. If it fails to go higher twice, you want to sell the second one, you go short, and you also want to draw your fibs off the last wave to get an idea of where the fib target is. Came right down on the fib target. Usually I exit half of my trade there and the other half at the trailing stop. So pretty much got out at 2,300. We got in this at 22, so you made another 20 pips. 10 pips per day doubles your account every 2 months. So you can see we pretty much on 2 trades made 4 days worth of minimum profit. Almost an entire week's worth of profit in one currency over an hour period. Now let's look at how having the value area of the previous 4 hour also enhances your ability to find high probability trades and to be in the right direction. Again, this looks at all the tick activity of the previous 4 hours and finds the most actively traded price. So during the previous 4 hours, it spent most of its activity right here near the bottom. That was the most actively traded price. This is the upper value area. So it opened today above not only the value area low of Friday, but it was above the previous 4 hour value area. And here's the value area high for the previous 4 hour. And it breaks out of here, you want to go long. And you can see, after that next period opened, it's still above the value area. So, but it's quite a bit above that area. And here's the value area high of the previous 4 hours. And so if it's above there, it's very bullish. If it breaks down underneath there, you can see that green line just showed up on there and happened to be right near the point of control of Friday. Underneath the point of control, we're definitely looking for sells, and it broke the upper value area the previous 4 hours. So another reason to sell there and sell there. And you can see it broke finally the previous 4 hours most active price. So anyone who was the average price where people were long for the previous hours right here. If it goes underneath here, you're going to have people's stops get hit, and that's one of the reasons why it fell. Now, if this trend was going to continue to the downside, it would come up to the previous 4 hours value area right here, which you can see it spent a lot of time at, and go down. So if you short right there and the trade fails, notice the bar is just barely red. It's not dark red like this. And so you put your stop above the high. If it goes down a bar and comes back up, I typically move my stop in half. We would have lost 5 pips there. And I'm not going to, when the bars aren't that green, I'm not going to just buy this break here. But when it goes up and it's just kind of hovering here and breaks out, you go long somewhere around 29 right here. And you want to draw your fibs. And most of the time when I'm in a trend that's not this strong, I will get out at the 1.382 fib. So I'm going to get out of this trade right here just because it's a low odds trade. In a 30 out at 40, you can see it went right up to the 1.618 area. But the 4 hour value areas I find to be very helpful. And if you're a scalper, you're going to really probably prefer the 60-minute one, which I'll show on my next example. The euro and the Swiss are pegged. The euro goes down and the Swiss goes down. Sometimes the Swiss is stronger versus other currencies than the euro is. That's why you can see a slight discrepancy. Either the euro or the Swiss will be slightly stronger or weaker. You can see earlier, I think it looks like the Swiss was a little bit stronger and also was weaker here. The dollar was strong at that point. So one of the trades you could have had was buying the dollar that was strong against the weak Swiss. Okay, here's the dollar Swiss. You can see it opened at midnight today. I just like to start at the midnight of each day. It opened, and the previous 4 hours point of control, which is up here, is above it, and even the previous period before that's right here. It opened underneath both of them. So when the bars are red and it breaks the first bar of the day, you go short. You can see the intensity started to increase. You look to sell here. It really didn't go down that much. You might have made a few pips on that. And it's always a risky buy underneath the point of control of the previous period. You don't know if it's going to come up here, find resistance, and break down. But if you do go long because of the dark green bars, that would be the only time I'd ever break that rule. Once it breaks through here, you pretty much, it's likely to go up. And you can see it shot up one wave, two waves right here. You draw your fibs on this. And it's usually not going to go up above 3 waves. You notice it went right to that area, the 1.618. Great place to get out. If you're in this around 35, you get out at 67. You made 30 pips on a currency. It pretty much only moves about 70 pips a day. So you caught half of its average true range in one move. If you wanted to wait for it to break above this area here, a lot of times it breaks above it and comes down and does a retest. You can buy the break out of this, but you would have only made 15 pips there. Now, because the trend's up, you don't know if it's going to come down and find support here. The bars are red, and they stay red. I like to see it break above the bar's high right here, and for the bars to go from red to green, or at least light green, and they didn't. So once it breaks down underneath this area here, it's pretty much in a confirmed downtrend, and you're actually still in this trade right here. You'd be short at 45. It went down 25 pips already. Again, that's 2 days minimum net profit here. You made about 30 pips on the way up. You had a whole week's worth of profit just with the dollar Swiss, using just our colored bars in the point of control, not even using the previous days in weeks point of control, which is right here underneath, right here, FX value areas. So here is the previous day's point of control. This is the previous week's. Remember, above this area, it's likely to go up. Underneath this area, it's likely to go down. If you went long right here, guess what? It kind of went up, down. The bars are kind of not dark green. You would have got out of this with a very, very small profit. If you flipped and went short, you would have probably lost 3 pips. You went long right here, and you wrote it up 40 pips. And this is a very high probability place to find your resistance. The fact that it shot through that, that's, this having the previous weeks and months, days and weeks point of control and value areas on here, this is the most actively traded price for the previous week. It's major resistance coming up to it underneath. There's no selling here. So the fact that anytime a resistance area gets broken, a lot of times it then acts as support, it breaks out, that adds to the probability of that trade. Most of the time when it pulls back here, it's going to find support and try to go higher. And one of the reasons why this broke down right here is last week's average price. Everyone who was, let's just say, long last week, this is the price most traders were long from, and obviously stops are going to get hit. So that added to the probability of this drop here too.